Dollar Industries and Rupa and Company posted strong results in the December quarter. Healthy double-digit volume growth is set to continue as companies tap new segments and enhance their product range. They aim to sustain margins which would maintain earnings growth momentum going forward. Both Dollar and Rupa, if you look at the stocks, they've both outperformed in the last 3 months with gains of 4% and 11% respectively compared to Nifty, which has declined 2%. Valuations of these companies also continue to provide comfort. Dollar's revenue grew 23% YOY. There was an equal contribution from the volumes which were up 11% year-on-year and price increases as well as product mix. Gross margins declined 180 basis points YOY owing to an increase in raw material prices. However, EBITDA margins improved sharply by 300 basis points owing to better mix and benefits of scale owing to robust top-line growth. Net profit grew 60% YOY. Meanwhile, Rupa's revenue grew 25% year-on-year, mainly led by volumes which were up 15% YOY. Price increase as well as better mix made for about 10% of the top-line increase. Rupa's gross margins declined 160 basis points year-on-year owing to increase in raw material prices. However, the company was able to maintain EBITDA margins as better product mix and benefits of scale offset the material price increase impact. Net profit was up 35% YOY. Both Dollar and Rupa are enhancing their retail presence. Dollar is implementing the Lakshya program whereby semi-wholesalers would be eliminated from the system and distributors would be required to cover a larger geographical area. Dollar plans to enhance its retail touch point from 1.3 lakhs to about 4 lakhs over the next 4 years. Rupa aims to enhance distribution reach in X-factor areas where it has relatively low presence and can grow much faster at a rate of 40 to 50%. Areas like West Bengal, Gujarat, Madhya Pradesh, Chhattisgarh, parts of Maharashtra and Western UP. Moreover, both the companies are also opening exclusive business outlets to ramp up presence. Women Innerwear segment has been fast growing given the increasing women workforce and a shift towards branded products. Rupa's share of women's segment is around 11 to 12% currently and the company is introducing new products to augment growth. Dollar plans to fill the product gaps in the next fiscal to strengthen its women's segment revenues. Athleisure segment picked up in the times of COVID and continues to remain the apparel of choice, reporting strong double-digit growth. Rupa is targeting about 30% growth in the segment aided by new product launches, while Dollar would launch athleisure products for women to tap the strong growth prospects. Innerwear players have been witnessing a shift from unorganized to organized segment over the past few years. The trend accelerated during COVID-19 as unorganized players' operations were affected and they faced liquidity as well as working capital issues. Now we expect this trend to sustain. Unorganized players are estimated to form about 40 to 45% of the industry and we expect organized players like Dollars and Rupa to benefit going ahead. Raw material prices, whether it's yarn or cotton, both have moved up sharply by about 50% over the past 1 year. Both Rupa and Dollar have undertaken multiple rounds of price hikes, largely passing on the cost increases. Both companies plan to undertake further price increase in the current month as well. Going ahead, advertising and marketing costs would increase as companies advertise new products and increase their brand spends. However, better product mix and operating leverage on account of a healthy top-line growth should help offset the cost increase impact. Dollar's margins improved by about 200 basis points YOY in the 9 months of FY22, while Rupa broadly maintained its margins during this period. Now we expect these levels to sustain. Dollar and Rupa are both trading at a PE of 17 and 16 times respectively based on FY23 projections, which is at a discount to long-term historical average multiples. Given the continued healthy earnings growth, we advise investors to add the stocks to their portfolio.